The market's in the day mix, but teetering on thin ice. My name's Dez here at Grok Trade. It's Thursday, January 9th, 2014. And as I said, the S&P and the Russells in bullish territory, with the Dow and Nasdaq in bearish territory. We have the S&P up a mere fraction. The Dow down 0.11%, the Nasdaq off by almost 1/4%, with the Russells off a mere fraction, or up a mere fraction. Banks showing some nice support here. We have a nice rally in the face of a mixed market, up 0.44%, with the VIX ticking a little higher here today, up 0.16%. Gold bouncing up from yesterday's drop, up 0.3%. Silver up a fraction, with crude oil or down 1/4%. US dollar down a fraction. Big pop here in transportation index, up nearly 1%. Another nice little rally in utilities, up 0.7%. Here we are looking at the S&P 500. And oh yeah, shout out to everybody that joined the class last night. We had users, get this, from 20 different countries on last night's free online class. Anyway, I'll be sending out an email to everybody, and you can get a recording for a nominal fee. So it's up to you if you want to take advantage of that or not. But anyway, check this out. Here's why I say we're on thin ice. We have the two blue lines coming up higher, making a rising wedge. We've been talking about that rising wedge in the bearish divergence on the MACD. Here's the problem. We come up and hit ceiling, we come down here for the floor, the foundation area, which we call support, and we cannot leave that support area. Do you see how the last 4 trading sessions have touched this floor? It is on... This is very dangerous territory, because if it cannot get off of support, it's going to want to break down through support. We have a big jobs number coming out tomorrow pre-market, and everybody's holding their breath for that. If it is at all weak, expect to see a mammoth red candlestick right here. Would not be out of the question to see that actually take place. Here is gold, chopping around, a little bull pullback, starting to bounce off the falling 20-day moving average, so I think we still have some upside potential here. And silver, we went to the wrong side of this line, but we kind of saved itself today. We had closed just above this, but we're below the 20-day moving average, which did act as resistance today. It retreated back from that, but we closed above a trend line, which is pretty important. Apple was off 1.28%, building a low base. Apple's in a lot of trouble, gang, a lot of trouble. I thought we'd see some upside potential here, but not after today. It's looking pretty weak. Facebook down 1.73%. We hit resistance and dropped, hit resistance and dropped. We're hitting resistance here and looking to drop. So that is something to watch out for, because we could drop like a rock here on Facebook. Google off about 1%. It's just pulling back a little bit here. Found some support at this trend line coming up higher. LinkedIn up a whopping 3%. I was telling you guys a couple days ago that gap down run up is usually a telltale sign of a bottom. Look for buying opportunities, and people are in fact doing that. And let's see, this is Microsoft, just down, 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 down. But look for a bounce coming up fairly soon at the rising 100-day moving average. Twitter was off nearly 4% today. Found support here at this area of support. You can see this area of support coming across. Found support, bounced off of this. We need to find support there to head up higher. If it does break down through that, woe to Twitter. So there you have it. Thanks so much for being a part, and we'll catch you guys tomorrow.